Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your business. He is the founder of the direct response marketing firm Market Domination LLC, and he is a 7-time best-selling author who has been interviewed on NBC, CBS, Forbes, Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity and real estate funds, discussing developments and trends shaping the industry. These experts will share with you how they've leveraged the power of equity funding to grow their businesses and increase profits, and how you can too. And now, here's your host, Cliff Locks.
Welcome to the Private Equities Profits Podcast. I'm Cliff Locks, your host. Today, I'm welcoming back a guest interviewed by my co-host, Seth Greene. Beatrice Mitchell has earned her bachelor's degree at Yale University and MBA from Columbia University Graduate School of Business, and is the co-founder and managing director of Sperry Mitchell and Company, an investment boutique firm which specializes in arranging the sale or merger of private and mid-market companies. Beatrice, thank you so much for being here today. I'm excited to have you on.
Thank you for inviting me back.
It's my pleasure. During the last episode, you appeared on with Seth. He touched on your background a bit, how after a career in advertising and the vice president of investment banking, you moved into a career of M&A almost by accident. I figured out I would start off with the episode by getting some of the background we didn't touch on last time. And you are the vice chair of Off the Record, better known as OTR, the oldest women foreign policy organization in the United States. I would enjoy learning more about that too.
That's exactly right. I was actually working for an advertising agency, probably on the verge of getting fired. I'm sure I was a terrible employee at a very young age, early 20s. Went to a party and met somebody who was selling companies at investment banking boutique. Basically thought, wow, that sounds a lot more fun. And I hounded him until he hired me. That is where I got my start. There I met my partner, Paul Sperry, who subsequently became my husband. And we started Sperry Mitchell after having been trained at the small investment banking firm that we were at. And that was 35 years ago. So here we are still doing the same thing, which is selling privately held companies.
Tell me more about OTR. I'm very interested in that.
So OTR, which stands for Off the Record, is the oldest women's foreign policy association in the United States. Exactly what its name says. We have off-the-record talks for our members in person at the Bar Association in New York City, and also now, because of the virus, on Zoom. They range from all kinds of topics, and our speakers are often generals or retired admirals, politicians. One theme, the commonality of all the speakers, is that the talks are off the record. And so therefore, the talks are usually very interesting. And we hear all kinds of things that we might not hear if these talks are being recorded.
That's impressive. Especially on Zoom, you could have an audience that could be very wide at this point with the membership. How do people learn more about joining your fine organization?
Just Google it, off the OTR. It's OTR, the oldest women's foreign policy association. It should come up.
You're also an owner and board member of Purseval Scientific. Can you tell us about your board contributions and what drew you to that company?
I'm the co-owner of it. Paul and I bought that business about 33 years ago. And what Percival does is it manufactures incubators for plants. So if you are a researcher, of either an industrial researcher or a university researcher, and you need to grow, say, grain or whatever it is you're going to grow, in a controlled environment where you're controlling for the light. So we use LED lights, the humidity, and the temperature. We do all that in a very sophisticated box, basically. And these can be huge boxes or they can be small reach-in boxes. Basically a scientifically oriented company.
It's interesting because I see hydroponics is starting to get more in line, and it's got to be the research.
Yeah, we're doing a big hydroponics project for a New York company right now as we speak. So,
as we look at the pressure on decarbonization and bringing farm to table closer to where we live, I think it's very vibrant what you're bringing, where you're, the company is at this point to help those growers to be able to fine tune what they want.
Well, and of course, with climate change, if a particular kind of seed grows well at 78 degrees and suddenly it's 85 degrees, you have to pivot.
Excellent. That's an important conversation when you're looking at the global situation of climate.
We sell a significant amount of our chambers to Chinese companies, actually.
Okay.
It's very much an international business.
Our listeners would enjoy learning about the changes in the M&A space since you were on. Now that we're hearing more from the Biden White House on taxes, what specifically should our listeners be aware of, and what does it hold for investors going forward?
Various reasons that people sell their business, and probably 60% of it is or 70% is personal. They've reached a certain age. They feel like to make a big financial investment to keep growing the company is something they don't want to do. They don't want to bet the farm necessarily. When they started the business, they mortgaged their house, they paid off the mortgage, they're taking some money out, and they don't want to go back into that. That's a good reason why people sell. Another factor, of course, is taxes. And so right now, the capital gains rate is pretty low. It's before the Medicare additional state taxes. That all changes. Everybody has a different rate for personally. It's just flat 20%, federal 20% rate. There is talk that could go as high as 45%. I think that one is off the table. I think the one that will probably get through without too much trouble is 25%. And I'm guessing that would be effective January 1. I don't think they'll be able to claw back. But so what did this do? So two things happened this year. One is everybody knew, all owners knew this tax, understood that there's a good chance they're going to pay more in taxes if they sold next year as opposed to this year. So there was a big rush to sell your company this year. And I think you're going to see that the M&A statistics are, and I know for the third quarter, I think they're the highest they've ever been. Certainly are busy. We've never been so busy in our lives. Everybody that I ever talked to called me this year and said, I have to sell. It has to be done by December 31st. So that's the first thing. Second thing, and this is more nuanced, is that I think owners lived through the pandemic and it was horrific for a lot of them, not necessarily financially. Many companies did extremely well financially. Psychological toil it took on people was tremendous, as it was for all of us. And I think a lot of owners are just, I don't want to do this by myself anymore. I want to have a partner. I'll stay on, I'll keep running the business, but I want a bigger partner behind me. And I want to put money at a low tax rate in the bank and done. There are more deals happening than ever at higher prices, because the flip side of this is that there's more money to buy companies available because private equity has raised so much money because I think buying alternative assets, which a private company is considered, is the flavor du jour to, now, the way maybe real estate was 15 years ago.
So you're really saying private equity is flush with cash at this point. It's creating a rush to get these deals done.
Yeah.
I know last time you had spoken about how aggressive the buyers were.
Yes.
Let's use your
not just private equity.
Forward. Yep.
It's family offices.
Okay.
Which look like private equity, but they're not. It's strategic buyers who also have seen their stock prices go up and therefore are feeling, if they can buy a company for less than they're trading, that's a better use of their money than just buying their stock back, which they'll get criticized for by somebody. And the fact that, of course, the biggie is that interest rates are so low. So if you are a private equity firm and you borrow half the funds to make an acquisition and you're borrowing at, less than 5% versus a couple of years ago, maybe you're buying, double that rate, you can pay more. Your equity goes that much farther.
That's very strategic. So when you're looking going forward at this point, do you think the market is going to stay strong, less strong, or stronger?
I think so long as alternative assets are considered a good buy, there'll be demand on the part of investors for private equity firms to keep spending money, and they will keep investing in private equity firms. If interest rates go up, I think pricing will come down. That will put huge pressure on the private equity firms. If you bought a company at 100 and you have to sell it at 75 simply because you're getting a lower multiple, if you paid 10 times, you're going to sell it 7 times, then your results aren't going to be so good. And then maybe investors will say, you know what, I'm doing something else. So the thing about private equity is the money is locked up for 5 to 7 years. So I don't think anything will happen quickly. You could write a lot of scenarios. You could say the economy gets even stronger and private equity, more money goes into it and interest rates stay low, which sounds like the Fed wants to have happen, and therefore the party continues. But, most parties do end at some point. I don't know when.
Cycles, right?
But we don't see anything negative right now on the horizon. And I'm pretty conservative, so I would tell you if I did. I don't at this point, except for the capital gains rate going up.
States are doing the same thing. They're going to raise taxes.
Right.
If we're out on the West Coast, New York, California.
Right. Exactly.
We're seeing some folks picking up and moving their companies. The CEO makes a decision they want to go move to Texas, and they're taking the company with them or to Florida.
Yeah.
So they're voting with their feet.
Yeah. A lot of our clients have done that. They've already moved.
They're moved.
Pre-sell, for that very reason.
Pretty bright.
Yeah.
You're the co-author of The Complete Guide to Selling Your Business. Is there anything you have learned in the last 6 months that would make you want to add to your book or amend any of these ideas in it?
Well, I would want to add a discussion of data rooms and how they work and why they're important. And I would want to add a discussion of Q of E's, quality of earnings. Excellent. Because buyers have come to expect to receive one when they receive the selling memorandum. And therefore, it behooves an owner to hire an accounting firm and create a Q of E before he goes to market, he or she.
Explain more about that Q of E.
The Q of E, basically what it is it's a complete review of your financials. Even if you have audited financials, it's going to be really in depth. So looking at the workbook of the accounting firm and checking it so that at the end of the process, the Q of E can say, yes, we really looked at this. They really did earn this money. We've looked at where the cash went. We can tell you it actually went somewhere. It's all above board. It's all, implied wouldn't be legitimate. We can follow everything, and we sign off on the work of the prior accounting firm. They do dive a little bit deeper. They will check all of the add backs and make sure so we had a client who was trying to add back something that he thought was totally legitimate. And the QV firm said, no, that's not, you'll get in trouble if you do that. So we took it out. They know what's what.
So what you're sharing there is the recasting of the numbers. Explain that to our listeners, also recasting.
So if you're selling your business and let's say that you show $5 million, as you pay tax on $5 million, perhaps you are running some personal expenses through the company. Perhaps you're taking a salary out of $2 million, and a normal salary for a business like that would be $300,000. We would say, okay, $1.7 million is an add back.
Excellent.
Your profit isn't really $5 million. If I were a new buyer buying you, I wasn't going to pay somebody what I'm paying, but you're getting paid. It's $5 million plus the $1.7 million or 6.7. Excellent. That's what the company should be priced on. That's a very simplistic way to look at this.
No, I think it's a very important conversation. And then based on what that profitability, usually there is an industry standard, an EBITDA, earnings before interest, taxes, depreciation, and amortization times, maybe it's 6 times at that point. And now you're getting closer to a selling price. Right. Private equity will make a decision what they want to pay for the business, but there's some rules of thumbs in the industries that your fine company can help sellers historically what that looks like for a multiple. So another advantage of working with your team.
Well, I think we probably do what every other banker does, which is to start by valuing the business, for free, because we want to make sure we're on the same page as the seller. I don't want to start a process and have somebody think they're worth $100 million and I think they're worth $25 million and it's not going to be successful. It's too much at stake for the owner, like, confidentiality, getting out that he's selling, et cetera, et cetera. So we want to be on the same page.
That's very benevolent that your team will.
I don't think it's benevolent. I think it's common sense. I really do.
Okay. Yeah. But when you offer a free valuation to start that conversation, actually help the individual potential seller understand what that value proposition looks like. And then you got the social side of it. What are they going to do with the proceeds after the exit? Because it's going to change their lives, hopefully in a very, very positive way. They got the taxes they're going to need to pay on, federal and state, depending on what state you're in. Right. There's some nuances that are sitting in there. What are you going to really net? And your fine team can help them understand each of those pieces.
Yeah.
You're an excellent when it comes to project management. And this is really project management to sell the company.
Yeah. It's good
process.
Good way to think about it. Project management. That's excellent.
So what's next for you? Are there any new frontiers you want to explore or new challenges you would like to take on?
Well, I think having been in this business for so long, I am enjoying being a mentor. I have several people I actually officially mentor, and we have monthly calls, and I try to be helpful and share what I've learned over the years. You've been in this business so long, you at a certain point want to start giving back. That's what I've spent a fair amount of time doing this year.
That's very dear to me. I mean, I enjoy the whole concept of setting up internships, summer jobs, and co-op programs consistently in my employment to always put those programs in place. And I'll talk a little bit more about that in a little while. But is there anything else we haven't touched on that you would like to share with our listeners?
You're an entrepreneur or an owner of a business. I'll just leave you with, this is an excellent time to sell. It isn't always. There's always the macro and the micro. And the macro is, of course, the tax environment, the economy in general, the sense of things getting better, not worse. And then there's the micro, which is the individual company. Surprisingly, many companies did very well during the pandemic and continue to do well despite the supply issues. They worked around it. And so you've got both the micro and the macro going together right now. But over my 35 years in this business, that's fairly unusual. You've got one, but not the other.
What you're discussing is the bell curve, where you could be too early or perfect, or you could be late to get the maximum price for your business. So we're saying that we're just right at the top of that bell curve.
We're at the top. We are absolutely at the top. And next year, when the capital gains rate goes up, if it goes up, let's say 5%, it'll still be a good time to sell, but you'll be minus that 5% that you would get this year. Having said that, there's no way any process can start now, October 1, and get done by year end.
What does that process take time-wise, as a rule of thumb at this point to help our sellers?
We have moved quickly this year because some people want to get it done. I would say it's an average of at least 6 months from start to finish.
Very good. I found the same for myself. 6 months is a fair period of time to do it properly, especially with the due diligence that's in place, assuming you have everything in order. One of the things I did with my company is I would actually photocopy all the checks that came in, or the EFT or ACH payments, let's say, and attach it, staple it to the back of the invoice. So the due diligence was easy because the bank recs and the checks are sitting there. They knew it was very systematic on the due diligence, but you have to have the foresight to say, this is pretty easy. It didn't really take that much effort. The statement that you have there for the bank, when you're making your deposit, all the checks are Xerox behind that, and that's stapled. And now forensically, it's sort of set up. Here's all the revenue. Here's the expenses. There's a duplicate on the check stapled to the back of that. As we do more ACH, you won't have that opportunity. Some folks are still using printed checks. Let me go to something that's dear and near to your heart. Get the same kind of feedback from my listeners. I continue to receive warm thank yous for advocating for the benefits of creating paid internships, co-ops, and summer jobs that provide vibrant learning opportunities for our youth. It's a wonderful recruiting tool, as an internship program provides an opportunity to hire a known and mentor them into talented executives. I think we can agree the best leaders are great teachers and mentors. Please consider adding more women to participate in your paid internships. Each of us can make a positive contribution and change the lives of our young people for the better, and it personally feels great. Beatrice, thank you so much for spending the time with us and sharing the developments in the M&A space. Each time you're on, you have some very valuable insights to share with our listeners. You're also the first reoccurring guest on the Private Equity Profits podcast. We appreciate that very much. I'll share your company's web address, which is sperrymitchell.com, which is spelled SPERRYMITCHELL.com. Again, that's spelled SPERRYMITCHELL.com. Beatrice, would you like to share your contact information with our listeners?
Our address is 595 Madison Avenue. We're right in the middle of Manhattan, New York, 10022. But the best way to reach me is by either email bmitchell@sperrymitchell.com, or you can always call me. My office number is 212-832-6628, extension 202, or cell, which I always have with me, 917-353-6596. That's probably the best way to get me, honestly.
I want to thank you to our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits podcast. This show has been produced by Market Domination LLC.